Welcome to Friday Takeaway. We take a look at non-bank lender Aeon Credit and former non-bank lender MBSB. But before that, markets moved as the US Federal Reserve plays a game of will they or won't they with interest rates. But it certainly seems like they will, with Chairman Jerome Powell actually signaled that the Fed could be cutting rates very soon. Pretty much maybe this month, citing a continued weakness with the global economy and the persistence of downside risks, and this sent the US stock market soaring. Jay Powell also seemed defiant when asked if he would step down if US President asked him to, something that Trump has been threatening for a while, answering with a straightforward no when he was asked during his testimony on Capitol Hill. He said that the law gives him a 4-year term and that he fully intends to serve it. Deutsche Bank, which has been struggling for the past couple of years, earlier this week announced a sweeping restructuring plan to improve its financial position, which includes pulling out of its global equity sales and trading ops, scaling back its investment banking, and slashing 18,000 jobs. Now, the bank has actually undergone several transformation plans over the past few years, but its current management is banking on this one being their Hail Mary last one. But speaking of Deutsche, the Wall Street Journal reported that the US DOJ is actually looking into whether the German bank actually violated foreign corruption or anti-money laundering laws when it did work for 1MDB. Helping them apparently is ex-Goldman Sachs golden boy Tim Leissner, now turned rat informant ever since he pled guilty last year. IJM Corp announced earlier this week that its $1.12 billion contract for underground works for LRT3 has been terminated. Prelim work had already started before the project was suspended in June last year. But the project had been remodeled from a PDP model to a fixed-price model, which is why IJM said it lost the contract. It said it will seek appropriate legal redress. Finance Minister Lim Guan Eng was actually asked about this termination and said he wasn't familiar with it as the project wasn't issued by the MOF. But he did comment on how the MOF is opposing the takeover of Plus by Maju Holdings after considering views from Plus's major shareholders, Khazanah and EPF. But he said that he would meet with Maju's management to be briefed on its new acquisition offer. This week we take on a couple of lenders and their prospects, one of whom had a rather nasty run-in with the taxman. That would be Aeon Credit, which is actually being sued by the government for unpaid taxes and saw its usually fairly steady share price drop. But are its fundamentals strong enough for it to be seen as a buying opportunity? On the other side, we consider Malaysia Building Society, which saw noticeably lower earnings during the start of the year due to the adoption of new standards and softer loan growth. But will things get better? Let's pair them up. When Aeon Credit started in the 90s, it was initially to offer easy payment schemes for consumer durables that it sold through most of its retail stores, which most of us would have stepped foot in at one point or another. Now it offers credit cards, easy payment, hire purchase for motor vehicles, mostly motorbikes, personal finance and insurance. It has a network of more than 12,000 merchant outlets and 4 million card members. Aeon Credit is facing the wrath of the taxman. It was reported on Tuesday that it is being sued by the government to recover unpaid taxes. It is being asked to pay taxes due for years of assessment 2010 to 2016. Aeon CFO actually said that the matter was related to this 96.8 million in additional taxes, which announced back in 2017. And the company said it actually had a good basis in law to challenge the validity of the taxes and the penalties. Well, its share price didn't like the news and it fell about 26 cents and was one of the top decliners during the day to around 16 ringgit 50. It has cut losses a little bit, but on average over the year it has been trading around 15 ringgit 60. Saying that Kenanga, which recently downgraded its call on Aeon Credit to underperform, cut its FY20 earnings forecast by 12%. It said while the group continues to grow its market share, it will come at the cost of enlarged cost of credit. Affin Hwang Cap is positive on Aeon Credit, though it does point out that first Q results came in below expectations due to higher expenses. Although it lowered its target price, it did keep its buy call, saying that the company was on track to deliver a solid performance over FY20 to FY22, supported by its value transformation project. MIDF, which has a neutral call, agrees that income growth remains solid, but does express some slight concern of the fast growth of its financing receivables given the current uncertain global economic conditions. Data from Bloomberg shows that the bulk of calls for Aeon Credit are all whole, save for the underperform by Kenanga and the buy by Affin Hwang. Target prices range from 14 ringgit 75 on the floor and 19 ringgit 80 on the ceiling. Malaysia Building Society, or MBSB, can actually trace its origins back to the 1950s. Majority owned by the EPF, this former non-bank lender graduated to a full-fledged bank back in 2018 once it completed its 645 million ringgit takeover of Asian Finance Bank. Its first quarter numbers were much softer and below expectations due in large part to an increase in provisions from higher than expected credit losses under MFRS 9, compared with FY18's first quarter where you saw a net write-back in provisions. But there are questions as to MBSB's outlook, mostly tied to slower economic activities in coming months, as globally the economy appears to be struggling and the bank itself admits that times ahead will be challenging. But analysts remain very positive on the stock. In its recent banking roundup, Kenanga maintains its outperform call on MBSB, even though it did tweak its earnings forecast down a little due to credit costs. AM Investment, which also has a buy, expects provisions, which remember affected first quarter earnings, to actually improve in the quarters ahead. MIDF says that it will see more base building going into this year, given that FY18 was a foundational kind of year, and that MBSB has the great potential to flourish as an Islamic bank. The two latest analyst reports both are buy on MBSB and the same target price of RM1.15. MIDF Research is cautiously optimistic of its FY19 for sure and says that the business plan is on track with more new products expected. Looking at the share price, it's currently just over 90 cents, but that's still below the 12-month average of around 94 cents.